And welcome back, Zach Manis. How are you, my friend?
I'm good. How are you, Dale?
Good. Interesting times we're in, Zach. I don't know what's top of mind for you coming in here today.
I thought we'd jump in and talk about metals because that's interests us both, and then we can pivot from that and talk about some equities. I think we align on a lot of those things at the moment. So,
Okay, so you know where
um,
the screen share is.
yeah, working on finding. There we go. I wanted to start with my ratio chart, the gold to silver ratio. That
Okay,
I've been tracking for a while. So we have this really, really large move up from the 2011 extreme
right.
that we saw where we were at basically a 30-to-1 ratio.
Yeah.
And I think we're due for more consolidation. We did get a pullback, but this is kind of a sharp move that I think is just an A wave. And I'm not really looking at this as to project it out, linearly. I think it functions for the most part more as an oscillator, but I do think that we observe, Elliott wave patterns even within some of those oscillators. So even though I don't think that it's heading much lower than the 50 region, initially, and once it gets to the 50 region, I think that it's going to get a pretty big bounce. I'm not looking for it to head higher than the 120 extremes that we saw from March 2020. I think that was more of an outlier. But looking at this move to continue down towards that 50 region over the next year or so,
Do
we
you
got.
believe, Zach? Zach, do you believe that the gold-silver ratio correlates pretty closely with the dollar?
Um,
What do
I
you think?
haven't I haven't looked at that to see how those line up.
Okay,
But that'd be
check it out.
interesting to yeah, I'll
Yeah,
take a look at
yeah,
it.
check it out. Okay,
But in the short term, we were looking for a little bit of a bounce to see some additional weakness in silver, as just in the very small degree consolidation, but
yeah,
looking for those to head down and silver to outperform again as the ratio heads down to the low 60s, then another
okay,
bounce and then lower. And it's interesting, like, people always ask, well, what does the ratio say? Is it saying that silver is going to go down and gold's going to go up, or or vice versa? It's only showing outperformance and just
right.
relative strength between those instruments. It doesn't necessarily tell you any specific direction. When we were looking for a bounce, I was looking for a consolidation, a pullback in both, but that it would be a little bit more severe in silver because silver, had an outperformance, since February,
Yeah,
significantly relative to gold.
okay.
The patterns that we're looking at, I'm expecting to fill out mostly the same, but just at a slightly different degree. So both of them, I'm counting a larger diagonal. I think for that, maybe it's better to look at gold first because I have that drawn up on a larger degree, clean looking chart here so that you can see this larger primary fourth wave that came into the 2022 lows. What counts best in my view is an ABC up for wave one and a deep retrace that fits very nicely with our expectations in a larger diagonal, and then filling out a bigger ABC up for the third wave, and then needing a fourth that might or might not overlap, probably doesn't, but just comes close deeper than normal for a fourth wave, and then another ABC move up for that final fifth that can take us close to the 3,000 level. I don't know if once we get into that fifth wave that we get that, bullish blow off top that metals often get in their final moves where that does spike up in gold gets to a 3,000 print. I'm not, betting the farm on a specific value there for the actual top. But what's interesting is that in here, the way that gold had more initial strength into the April, off of the October 2023 lows, it counts as further along and closer to the top of this wave three. So looking for a more muted diagonal to finish off that move, as long as support holds. If it does drop down, then I would go back to this alt count where this is all just a very, very large A wave of the wave three. And so that would be more bearish in the short term to get more of that B wave consolidation back to the 2200s. But from there, it can head up more bullishly again. The main difference, though, between gold and silver is mostly just in terms of degree, where silver looks like this move was just the A wave, and this was the B wave inside that larger parentheses wave three, and this whole move off of the May low was just wave one of a bigger version of that same diagonal that we are just looking at in gold. So this can take silver up to the 40s, low 40, 42 region. As long as it holds, it really needs to hold this 28, 29 region where we held last week, but looking
If it
pretty
doesn't,
good.
if it doesn't, because we're pretty close.
We are.
If what's the revised count if it doesn't hold?
If we drop hard under the 2850 region, then I think we chop further down to the 26s as that alt yellow B wave that we saw on gold.
Okay, got
And
it.
this would be a higher B wave in a wider expanded flat for the same consolidation. So the A wave stays, the target for C of three stays, and just instead of this being the 1-2 start to the ending diagonal, it would be an A, B, C for this yellow B wave here.
Yeah,
And then we would restart and get that 5 wave up move to the C wave of three, still into targeting the 40 region, just a little bit delayed.
got it.
So I know we
That's
talk about GDX a lot, but we've talked in the past also about some of the problems with GDX as an index because of its weighting and the relative size of so many of the mining companies. So the TXGM, which is a Canadian global mining index, is something that I like to follow pretty closely because it does have a lot more representation of many more of the miners, especially a lot of the Canadian and some of the Australian ones too. And it is less heavily weighted to those larger caps within the mining sector on the American side. It is not as heavily weighted to Newmont and Barrick and a couple of the others.
okay.
And it has some interesting differences. For the most part, it looks like a very similar pattern to what we're tracking in GDX, treating the low back here in 2020 as a primary wave two in a larger diagonal structure and looking for the rest of this ABC to fill out for the primary wave three of that diagonal. And inside that C wave, the intermediate parentheses C, we have a solid 5 wave move up off of the October or September 2022 low, had a pullback to a 618 Fibonacci retrace as the wave two, and have a solid start to the wave three at that minor degree. The major difference between this as an index and GDX and GDXJ is GDX and GDXJ held a higher low nominally and the February low. So their wave twos can still count here and they can get a less than desirable wave one and can be a more nested count further along. But there are a lot of the individual names that did make lower lows and that look better as their wave two equivalent counted into that February low. And this move off the February low just being a larger new wave one inside that wave three. And within that, the GDX, if you're going to count it that way, it's possible you're at the very top region of the normal support. And we'll look at that in just a minute. So you have to allow, to be prudent, you have to allow for another B wave and a C wave to come down more into this normal fib support region. Whereas the global mining index, looks like it's much closer. You could even force a count to be complete for all of this circle wave two consolidation into the support that we are already hit. But a little bit more of a bounce and then one more low towards the 113s. I think would be the most ideal there and set up for a really, really nice swing move heading forward in the months to year ahead.
So on
And
GDX, Zach, would it be 31 and a half, I believe, is halfway back of the whole move that we had?
yeah, so if you're looking at this purple fib retrace is off of this low. That's
Yeah,
the same low we're counting as the alt wave two on TXGM.
right.
So if we're just at the very top of this normal fib support box, so we can squeeze in an ABC and call that, technically that's enough to be all of that wave two. So I'm not going to fight any move to the upside and definitely have a lot of long exposure to the metals and mining sector right now, particularly because of that bullish silver chart. But if we see a clear corrective retrace that only gets to this 36s as resistance, and doesn't look like it's an impulsive move that's setting up to break out over that, then it's time to get a little bit defensive to allow for more of that sideways consolidation into July before it tries again. But at the larger structure, very similar to TXGM, this is a gorgeous looking 5 waves up and a corrective retrace to the 618, whether you count this as wave 2 or this is wave 2. And, when you zoom out, yes, you can get a B wave and a C wave for a wider flat, but it really isn't needed. So any strong move over the 37 region is easily a breakout. And whether you're counting it as that purple larger 1-2 that fits better with the TXGM and maybe with Newmont and a number of other things, or this nested structure already further along inside, the interesting thing that I've talked about with our metals and mining subscribers is that because we're dealing with this larger degree C wave, and whether we're in the nested structure or is a larger wave 1 and wave 2, our targets for this 3 and the rest of 5 of C are the same either way. So it's just a difference of the subwave structure that we see in here. And if this is this larger purple wave 2, then we're going to get another 1-2 here before we get the full-on breakout to head up to the 50s. But pretty important support in this 31 region.
Okay.
But would like to see at least a good bounce back towards 36s pretty soon.
Okay, thank you.
From there, you want to take a look. I have another ratio chart that we can talk about, and that's the ratio of the S&P to gold, which also looks like it's due for a pretty significant consolidation that might have started back here. I think we looked at it again, over a year or so ago. We had an initial move down that looked a little bit deeper than a 4th wave and only a corrective move up so far. Couldn't break down under that moving average and instead got another nominal extension higher to count as a better 5th wave of that 5th. Only 3 waves down so far, but we're looking for a bigger corrective move so that doesn't have to start as an impulsive 5-wave move down, an Elliott wave. But off of that initial move down from this high, we're filling out a pretty clear corrective bounce here that looks very, very close to being complete. Snap this to the actual.
So this is saying that the gold is going to begin to outperform the S&Ps.
Yes, and again, if we're talking about a ratio, so that doesn't necessarily mean that the S&P has to drop suddenly, or that gold has to take off. But it could be some kind of combination of relative weakness for the market, for equities in general, compared to extra strength in the metals than what we've seen so far. So it could get a little bit more of a 4th and a 5th wave up towards this 2.37 ratio fib level at the 764, and even allow for a little bit higher than that. But certainly could count this complete as a WXY instead of an ABC. The difference there is, we usually, our default is to look for an ABC move as most corrections. Sometimes you get C waves should always have 5 waves. Sometimes you get something that decides to be complete when it only has 3 waves inside what should be the C. So usually after the fact, you have to go back and say, all right, that didn't give us 5 waves of the C wave, so we have to count it as a WXY. Okay. Not usually something that you can heavily rely on. So I'm going to leave room for that to get more of a 4th and a 5th wave up inside that C wave. But now that we're talking about the equities, I think the S&P, or we'll talk about ES first, is very, very extended. And I mean, I don't think it's very, very extended. I think the perception is that it's very, very extended because we had a couple of moves that looked like they could have been putting a top in place. And then, we were looking for corrective bounces, and then the start of another move, and then a corrective bounce from there. And that corrective bounce turned into an extension. And then we filled out that extension, and now we have another little extension on the end of that. But this extension off of the April low looks very, very complete as 5 waves up. So it hasn't shown any signs of breaking support yet. But like you, I'm looking to say where the weakness is going to come from, because this does look like a complete move. And so sure, it can continue to extend, but what's the main driver and what does that look like? And then where is that weakness looking like it might rear its head from? And I also like
Okay.
to look at the equal weight and say,
Yeah.
that similar to what I think Blake was talking about, that XLG chart, that I think that it's two sides of the same coin. The XLG chart that he was talking about is the just the most heavily weighted things that are performing the best and what their chart looks like. This is trying to smooth out that distortion and put everything on an equal playing field and look at the market as a whole without the extreme weighting to some of those very large cap tech companies. And the very interesting thing that I see here, similar to the Russell and the Dow that you were talking about, is we have a lower high and then
Yeah.
considerable significant weakness since then as well. So that lower high in May is only 3 waves up, and then continuing to make a couple of lower highs from there, while other things are making new highs, is potentially very, very telling. So seeing is the RSP is showing signs of the initial stages of a bigger consolidation starting.
Okay. It's come through the grapevine to me that Avi has been bearish for a while. Still bearish?
I mean, I think that the a lot of people have difficulty parsing out the differences in degrees in the way we talk about Elliott wave. So we can talk about a larger degree top forming, but still be looking at a smaller degree and showing where support is for further extension, or looking at a very, very small degree saying, if this is going to turn into a top, here's the path that it needs to take. And if we get over that resistance, then we can be back into extension mode. So I think a lot of that, that perception is more of a disconnect in understanding how we approach different structures in Elliott wave, and looking at a bit macro degree and saying that things are, risk skew from a very, very high level is very unfavorable for being super aggressive. But still looking for those opportunities where things might continue to extend
I,
from.
I mean, what I heard, and you could push back, but what I heard was, peak. I think he thought maybe the April high was it, and then we had retracements.
Right.
Then even at new highs, I still looking at it as an expanding flat, and he was looking for 3,500 before the election, and then a rally into the election, and
I
then
mean,
fifteen
I was
hundred after that.
I think we've been in pretty bullish extension mode, looking for higher highs for a
Okay.
while. Especially,
Well,
I
that
was very, very bearish back in November,
mhm.
but once we didn't turn down from that retrace off of the July highs from last year, that a lot of that went out the window. We've still been looking for some individual shorts and looking for some weakness in some places, and
Well, you could
those have
have a
been
different view than Avi, even though you work
right.
together, right? But
True,
that was
absolutely.
his view, wasn't it?
Right. At the time, I think once you get over some resistance, then you stop looking for a
So
significant top. Right.
he's not bearish anymore. Okay, I'm interviewing you anyway, but I mean it
Right.
was a pretty aggressive call. And who knows? Still play
Right.
out. Expanded flats. This one's been going on for since the October lows of last year,
Right.
right?
Right.
So
No, no, no. I think
who
it's I don't think once we got over the July high from last year, he wasn't looking at it as a B wave anymore. He was looking at it as a fifth wave extension. And so then looking for the further extension targets, which is
oh,
what most things other than, the Russell, that still looks like a B wave.
so it's
Um,
extended too much. The S&P's on this recent rally to being a regular B against say the high at 4,800, then the decline and new highs being in a regular B with a C to
right.
come.
I mean, if depending on the degree, so like the Nasdaq, we're looking at it as just being a cycle degree wave three topping. And so if this high back here in 2022 was actually the top, then technically this could still be a B wave of an expanded flat for an ABC flat for just a consolidation off of this high, and then continuing a lot higher. The S&P we're looking at as a much larger degree consolidation topping, this super cycle wave three top off of a cycle wave five from the 2008 lows. So that top should not have an expanded flat as the start of an A wave inside a larger A wave of a consolidation. So
Okay.
on the S&P for sure, once it took out that July high from last year, then it was very, very highly likely that it was going to take out the high from 2022, and then you're into an alt fifth wave extension, and so then looking at where's that extension, what's driving that extension, and I think
Okay.
we talked about the weakness in the Russell, the
Yeah.
strength in the market has come largely from this huge
As
extension in
yeah.
in
Semis.
semiconductors, right?
Yeah.
Nasdaq as well, but like this is the main driver
Right.
of that tech extension, and this really looks like five waves up off of the April low, and a lot of this was driven by Nvidia. There's some very
Right.
noticeable divergence between AMD and Nvidia now. And there were some good setups for these to head long. I told my members that I just got out of my SOXL position that I scalped again from 2 weeks ago. Um, because this looks very, very complete. So I had been moving up the stops, but so far it's not showing any signs of cracking. But this, when you're zoomed in on a 1 hour chart, it doesn't look so extreme. But when you back up at much larger degrees and set things up with like Cisco charts from the 1990s, it's
Okay. Yeah.
very, very concerning that it doesn't take a lot of a break of support for something that is so extended to the upside to have a pretty major reversal. That doesn't mean
Yeah.
that anybody should go out.
One big range down day would break that whole trend. Is that what you're talking
Exactly.
about? Yeah.
Ab-
Uh, Go ahead, Zach.
oh,
I,
I was just saying, I wouldn't go out and short Nvidia because, we don't have any evidence of a top in place, and that could be incredibly dangerous. But I do think that that's where the first initial like real significant weakness could rear its head from.
okay. So you're also looks like bearish on XLF. I wanted to ask you about TLT and the
Okay.
action we've had the last few weeks. To me, even if we pull back, it looks like this recent low that we've had could take it back to about, I don't know, 105 or so, and actually I can make a case for 120. So I was
Yeah,
wondering
let
what
me
you're
just
thinking
I'll
about
pull up TLT. I try and I look closer at the subwave structure on
bonds,
the
notes.
30-year
Oh,
futures. Yeah, exactly.
okay, all right,
But it's mostly the same. And looking for what whether this is a corrective retrace for a larger degree bottom. I think the structure is going to be the same, and we have an A wave up, we have a B wave consolidation, and are trying to get this C wave started that can take us up towards the 110 to 112 region on TLT, and are still working on filling out more of just wave one in that larger swing move.
okay,
So I think this was the top. The futures certainly look more like they've started this four.
yeah,
Um, so inside this is 1, 2, 3, 4, getting a fifth wave up for a small leading diagonal for that wave one. And then
okay,
another consolidation back here into the 92 to 90 region. And then they can take off to the upside. But right now, short term, looking for consolidation that should hold about 92s. And then a move up towards 96s for the rest of is an ABC up for that fifth, and then a bigger ABC back towards the 90 region, and then we can get a more impulsive looking move after that.
okay, all right. And you know what is a lot of people aren't talking about energy anymore because it's hard to understand what's going on. We had that OPEC meeting and they crushed it, and then
Right.
we were back above it, and then we had a little sideways consolidation, and then it's starting to go. Well, there's a view. Okay.
Right. We're I'm going to go out to the larger view here because
Yeah.
we're very, very bullish on energy.
Okay.
We're bullish in the short term for another high that can be, because you're dealing with a commodity, that can be a blow off top. And you saw in the other chart that I had a smaller degree pink AB here,
Yeah.
which is for a larger version of this A wave that can
Yeah.
take this even higher for that wave one.
Where's that
But
come in? 140?
um,
120?
yeah, I mean, yeah, I think 120s is the conservative larger degree view right now. There's a lot of individual energy charts that were very, very bullish in stock waves, and most of our bullish wave setups lately have been in the energy sector. We have a lot
Okay,
of short
interesting.
wave setups that are playing out, but there's a couple other things that we're bullish on, like airlines and some other stuff, which will be
Okay.
interesting to see how that's a sector that is very heavily dependent on energy prices. But
Yeah.
you know, after this short-term move, that should take us probably the rest of this year to fill out, it might even drag into early 2025 to finish the rest of this fifth wave off. We are looking for a consolidation back into the 64 to 43, which will, these fibs will change based on
Okay.
where
Well,
this fifth wave ends
that's a
up.
quick, powerful move from where we are, about $40. Is there anything geo-wise that you think could be the spark for this, for it to happen? And yeah, I don't know if it's going to come from, China's rebound of economic growth and demand. Wouldn't you think that there might be some kind of supply shock to drive that?
I hope that, the normal like things that we think about in terms of being the events that spark some runs in the energy sector, I hope that a lot of those things don't kind of happen because usually they aren't good for a lot of people.
Well,
So
doesn't every recession start with um, a high, like, some type of oil crisis? Almost everyone does.
I
Happens
think
after
so.
them. Yeah,
Right.
so that would set the stage for
Certainly
a
would.
recession. Yeah.
Certainly
Uh,
would.
Very interesting presentation again, and thanks for letting me grill you about something you didn't even say. But
Right. No
I talk
worries.
to a lot of people, and I have a lot of friends and traders in the business, and I can't, when they tell me something, I can't say, well, don't tell me that.
Right.
So I listen, and and people should listen to you, Zach. So
Thank
what's
you.
the best way for them to do it, to keep in touch with
Stock
your work?
waves,
Okay.
either at Elliott Wave Trader or on Seeking Alpha in the marketplace there, or
Oh, cool.
at Zach Manis, ZACMANNES on Twitter
Yeah,
or
X.
X if you X.
Yeah, it almost sounds like a divorce, doesn't it?
It
Twitter is
does.
now an X. Anyway, don't forget to get your alimony check out. Zach, great to talk to you, and
You too, as always, Dale.
I'm a fan and appreciate you
Thank you.
coming here over the years and sharing your excellent work with our community. Thank
It's
you very
always a
much.
pleasure. Have a great day.
All right, everyone, follow Zach at Jack Manis on X, and that's a wrap. Good luck the rest of the day. You could be with the team in 13 minutes, and keep an eye on that oil. Some decent looking moves coming out in the last month. I think they washed out the bulls, and now they're squeezing the bears. So good hunting, everyone, and don't just count your pips, count your blessings. See you, Sinatra, Laura, the rest of the crew. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.